Okay, so 15 pips a day. That's all you need to do to make money trading Forex. And I'm going to show you my week's trading, which had an 80% success rate. And it's such an easy system. So I'm using the London breakout strategy, which is a good system to use to get just 15 pips a day. And if you don't know what London breakout strategy is, it's trading the pound against the US dollar. And it's trading, as the title says, the breakout from the Asian range. So I'm based in UK. So the Asian range for me is this grayed out box here. Okay. And it starts at midnight, goes to 8 o'clock in the morning when the London session opens. Now, there's not much trading of the pound US during the Asian session, so it's normally a fairly tight range, as you can see here, and you're looking at the highs and the lows. So, for example, here on Monday, this candlestick here, each of these candlesticks is a 5-minute candlestick. So this 5-minute candlestick here, it broke out, and it broke out at 12.367. Okay. So then what I did was I placed a trade with a 10 pip stop. I'm risking 10 pips for 15 pips, so 1.5 risk reward ratio. And I traded it until I got my 15 pips, which was down here, 12.352. Okay, so 15 pips, a £10 a pip, that's £150. That's not a bad return, okay, for just 15 pips. But as you can see, it continued carrying on down. Now, maybe I could have put a trailing stop in, or, you know, maybe if I'd been monitoring the screen, but you should never watch the screens when you're doing these 5-minute candlestick charts, because it will go up and down and come close to your stop and your emotions will get involved. But it's gone all the way down here. In fact, it's gone all the way down until the opening of the New York session at 2:30. And it's something like 60 something pips. But you're not always going to get this. And it's, you know, it's not about being greedy. It's just, you know, getting those few pips. If you just get a few pips a day, you will make money. So here we go on to Tuesday. Tuesday, we've got another tight range, and it's broken out of the box here. Now, one thing I don't do is I don't trade on the top of the wick here, because at the top of the wick there's met resistance, and you can see it's come back down again. There's a few more wicks here. So I came in here, and that was at 12.371.3. And he went up to 12.386.7, my 15 pips. And I was lucky, because if I'd gone for 20, it's gone up 12.38, and it's come back down again. So even 20 pips, which a lot of traders go for, you know, I wouldn't have made it. Okay, maybe if I'd put a bigger stop. Some traders might put a stop at the middle of the range or down the bottom of the range. But even if you've got a 20 pip range, if I'm just going for 15 pips, that's not enough. Or even, you know, if you're going risking 20 for 20 pips, okay, it's a risk reward of 1-to-1. But, you know, 15 pips is enough for me, and I'll show you later why. But that's Monday and Tuesday. And at 10 pip on each one, that's £300 already. And as we come on to Wednesday, another tight range. Yet again, it's gone short here. 12.440 I went in at, and I got down to 12.225. And yet again, it's just about made before it starts coming up. So this is what I mean about not being greedy. Just 15 pips is all you need. It's gone back up again. So you don't need to go for 20, which a lot of traders will go for 20 pips. 15 pips is more than enough. I mean, you're now looking at what, £450 for the week. Now, this is the problem here when we get to Thursday. This is a trade that I definitely shouldn't have done, because I was on a winning streak. I let my emotions get involved. But at the same time, I was following the system, because it's a high and a low of the Asian range. But you're looking at approximately 56 points when normally it's about 20. And the range was very tight, to be honest with you. The range was very tight until you got till about 7 o'clock when the European markets open, just before London does. And then it started going up. And you can see the high, you always put your high at the top of the wick, but then you don't trade off the top of the wick. So I went in approximately to buy at 12.514.7, and it went up to the top here, but it didn't go anywhere after that. And then it started coming down. It would have taken me out. And then here, you can see here, look, it's come all the way down here, but it did go all the way up here. But even then I wouldn't have made 15. It was at 12.526. That's like 12 pips. So even then, unless maybe I was on 10 pips, I might have just made it. But, you know, 15 pips, I don't think it's being too greedy. But I've learnt my lesson from this, actually, because it has happened before. And I think this is where you can tinker with the London breakout strategy. To have such a large range like this, you're not as likely to get a winning trade. Maybe if you if you put larger stops in, you can counteract it. But for me, it's too much risk, too much gambling. I don't think I'll be trading that again. Sometimes it's better not to trade, and that's where your emotions come in. And maybe I did let my emotions get me go a bit awry on that particular trade. This is what we want. A nice, this is Friday, okay? As I'm recording it, this is Friday. This is a nice tight range. And in fact, I was a little bit cheeky here because I thought, well, don't go for 20. Let's even go for 18 pips. And I went in at 12.522.3. And to be honest, I was really lucky here because I got out at 12.540.3, which is my 15 pips. Remember, I've got automatic stops and limits in here. So I wasn't watching the chart. It automatically took me out. And it took me out at 12.540.3. But as you can see, it went up to 12.541.1 before it started coming down again. So I was lucky because if it come back down here, it would have closed the trade out on me with a loss. But then it's come back down again, come all the way back down here. So I certainly would have been closed out. It's almost come out of the range. But then it's come back up here again. But then it's come back down again. And this is what a 9:40, and this is what like 1:30, 1:40 in the afternoon here on Friday. So it's obviously met some resistance here and that, but not to worry. I've got my 15 pips. Okay. So for the week, there's 4 out of 5 trades. That's an 8 winning trade. That's an 80% success rate. And at £10 a pip, you would made just over £500 at £10 a pip. So, you know, and obviously, you know, if your pip value was higher, if you only bet £5 a pip, I say only, but you'd still be taking home £250 for the week. If you doubled it, £20 a pip, you know, you're looking at £1,000 for the week, and you know, that's on such a simple strategy, a strategy where you don't need to monitor it. It's pretty consistent. You're not always going to get an 80% success rate, but this is how you get 15 pips out of the market. It's just a case of not trying to be too greedy. As I say, a lot of traders will go for 20 pips or more, or sometimes just let the trade run out. Just let it run its course, maybe for an hour or two, set a time limit on it. But for me, I think it's just easier just to watch the risk, which I know is guaranteed to only be those 10 pips, but I've got the possibility of winning 15. And on something like that, I know I can make money even if I have losing trades, and that's what it's all about. It's about not being greedy. It's about being consistent. It's about getting just enough pips out of the market to make money. It's not about going for the big moves, because you're not always going to get the big moves in the market. Even with the pound US dollar, you're not always going to get necessarily a big 100 pip move in your favor. So you've got to get what you can out of the market. Get in, get out with your profits, and that's what I've done this week. And you know, it's up to you how you trade. But for me, it's worked for me this week, and I've had a very, very successful week, and I should be going out for a run with a very happy smile on my face. So yeah, it's been a good week, very, very good. So I'm really pleased with that. So it's off to a run for me.